Morning everyone, this is my first portfolio update of 2021. I didn't do one in December because of obviously Christmas and New Year, and obviously everybody was busy including myself. But yeah, this is the first one of 2021. The last one done was on November 2020. The portfolio at that point was at £21,200 I think, and it's now at £21,687. However, I have taken out of my stocks and shares ISA at £2,300 in cash for obviously Christmas presents, car repairs and stuff, just general stuff that I needed the money for at the time. If I hadn't taken that out, I'd been pushing around the £24,000 mark in my portfolio now, and that's an increase of £2,800 in the portfolio since the last update, just over 2 months ago. And I have not added any money into these ISAs. Obviously, I can't add any more money into my lifetime ISA now because I've filled it all up for the year, and I haven't added anything to the stocks and shares ISA. For the year to date, since I started this investment journey in March, like, you know, the way I'm currently investing, I'm £6,000 up at a rate of 39% a year, which is a great rate. I think I could have got more out of this year because there was quite a few bargains at the start of the year, and I'll obviously be going through my 2021 investing strategy in a separate video. I'm going to be doing a video about my investment strategy for 2021 and explaining how I'm going to invest this year and moving forward every year on from that point. I've come up with a simple strategy for myself to hopefully compound money at least 15% a year, hopefully 25-50% some years, but we'll see how that goes. Let's hope we have another year as good as, well, investing wise, as good as this year. 2020 wasn't the greatest year, but now we're in 2021. Since the last portfolio update, obviously there's been more vaccine news, and it started to roll out in the UK. Oxford and AstraZeneca have come up with new vaccine. Also, Trump lost the election, and there's been a lot of drama in the US over Trump's election, like not accepting the result. But it looks like that's sort of seen through the waters now. And the big news is that obviously Boris Johnson got a BREXIT deal through, and obviously everyone's not really talked about Brexit this year, but it has put a lot of investors investing in the UK for like the last 4 years, well, 5 years now, since the end of 4 years since the end of 2016, since the Brexit vote was cast. And obviously we saw a bit of a jump there with the news of that. So obviously we're not out of the waters yet. The economy is struggling. There's a lot of job losses and stuff like that, but obviously it's good news, and looking forward, there's light at the end of the tunnel. Let's just hope we can all get there. Obviously we're in a third lockdown now, and hopefully I picked a few stocks that haven't really been affected too badly by these lockdowns. But let's just take a deep dive into the portfolio, and I'm not going to go through each stock too much this week because I'm obviously going to do a watch list video also for 2021 and go through the stocks and why I'm watching them, on my screening process for stocks, and why they're in my watch list and why I'd like them in my portfolio. And then obviously I'll do an analysis, and hopefully a weekly analysis video in depth to each of them stocks and them companies. A broad outline is I'm investing in quality companies, and I'm trying to get them at a reasonable price, so that I can obviously, and companies with good growth prospects over the next 10 to 15 years. Let's first have a look at the stocks and shares ISA. Obviously, as you can see, I've got more cash now because I've sold a few positions, just to bulk up my cash position to obviously jump on any opportunities that may arise with, you know, dips or corrections, you know, etc. As happened in March last year, but that was a Black Friday event, that was, in terms of sales on the stock market. So if you were sat in cash then, as I was, it was a great time to be investing. First of all, let's look at the stocks and shares ISA. Since the last portfolio update, I've cleared all my funds out of here. I cleared my Greg's holding on a £200 profit, which was about £700 worth of Greg stock I sold, but I'd only put £500 in there. So, and then I obviously took the cash out for what I needed it for. The only holding I have in this portfolio now more or less fully invested in this portfolio because I'm not going to sell this still. I think this is going to be a big winner. 100,000 units are brought at prices of about 1.2 pence a share. Since the last portfolio update, it's now 2 pence a share. So that's an increase of £820, a 70% increase in the last 2 months on this stock alone, which is a phenomenal return. Obviously, it could go back down, and I hope it does, because then I can stockpile more, because I'm looking at the future. I want it to be, 25p, 30p a share. I'm going to make a lot of money. The more shares in this company I can get, the bigger the profit, the bigger the capital gain that I'm going to get, and I think I can make a lot of money out of this stuff. I might still invest at this price, but not at the moment with my current cash levels. Even though I've got £11,000 cash in my portfolio, but I might miss out on other opportunities, and I do think it's quite highly priced at the moment with a PE of 42. It's only a small cap company, obviously, as you can see, £10 million market cap, and its 52-week low was at 70.7 of a pence. So get it at that price, and it's a bargain. You never know, one day in the future when it's more profitable and it's it might pay dividend, a penny a share. That would be great, because if you only brought it at 1 pence, that would give me my holding back there in a dividend payment. But it doesn't pay a dividend at the moment. Obviously, he's looking to grow the company. Obviously, I'm not going to do the month graph on this still, because I haven't done a portfolio update in over a month, so I'll do the 3-month graph. And as you can see, it was at the 120 mark, and now it's at just over the 2p mark, well, around about the 2p mark. Obviously, the spread's quite big on it. It's 10% spread on that, so if you wanted to buy into it, you'd lose 10% already. So that's why I'm wary about buying into this stock. I like to just hold it and wait for the price to go down, and then obviously stockpile big into it, because you lose the money on the spread anyway. And that's that for that. Distill obviously is a manufactures drinks. Red Leg is its main brand. It's a premium. Well, it's not really premium. It's sold in Asda's and Tesco's all over the country. It's a spiced rum. It's got new flavour. It's got a banana flavour and a pineapple flavour, and it's just launched its banana flavour. And the company's obviously increasing its market spend, like for its marketing and stuff. And it's also gone into a deal partnership with Franklin and Sons, which does tonic waters and stuff, and sodas, to make cans of Franklin and Sons soda and Red Leg rum. And obviously you've seen other brands do it before, like Smirnoff and Coca-Cola and JD and Coca-Cola. So that's good looking forward for sales and stuff. And you never know, it could sell the whole company one day, and for a premium price or a higher price than what it's at, just for the brands alone. But obviously I'll do a video on that stock on its own. I do like that stock. It's now my biggest holding between the two portfolios, as you'll see in a minute. Now let's look into the big lifetime ISA. It's coming up to the end of the financial year. March is the last month. 5th, 6th of April it starts again. And never mind. I've obviously invested fully into this lifetime ISA, and I always put the money in this first, because for the £4,000 you put in, you get a £1,000 bonus, 25%. So it's similar to a pension. You get 25%. So for every pound you put in, you get 25p. As you can see, this portfolio is £2,000 up from the previous video. It's now at 19,500, and whereas it was 17,500 in the previous portfolio. My invested cash is a lot smaller than it was, and I'll explain why in a minute. Obviously, in my 2021 investment strategy video, you'll see what my investment strategy is and why I need cash quite a large amounts of cash in the portfolio to deploy that strategy. And obviously, as you can see at the moment, I've got £11,179 cash. I wish I had that much cash in there last March, because I'd be, sitting on a pretty big portfolio right now if I'd invested in the companies that I invested in much heavier terms of more money piled into these companies that I invested in. But anyway, let's start with the biggest holding is Fundsmith Equity, and that is purely because I sold my position out in my stocks and shares ISA to get the cash out, but I didn't want to lose out on my holding in Fundsmith. So all the money I sold in Fundsmith, I just added to the position that I had in the lifetime ISA, so that's why it's the biggest position. And I also dollar cost average £100 a month into this, and I have this fund in there purely for global diversity, because I only buy single shares from the UK that do business abroad. I like them to do business all over the world, not necessarily, but I do like that. And obviously that's why I've brought Fundsmith Equity. Obviously you can see the top 10s, big names in there. Microsoft's its biggest holding, PayPal, everyday use, Facebook, everyone knows what that is. Novo Nordisk, that's trying to cure diabetes. Philip Morris International Cigarette Company. And then the two makeup companies, Estee Lauder and L'Oreal. And obviously his new positions this year were Starbucks and Nike, but obviously they haven't made it into the top 10 yet. But he does only hold 29 positions, so I'm sure he's got a sizable position in them two quality companies. And obviously the last 3 months it's a 6% increase, but if you look at the 1 year graph for it, it's a 20% increase, which is quite good considering, you know, how much money was lost at the start of the year in the stock market. And obviously most stock markets have only just broke even at the, you know, a bit below what they were the year before. But he's done 20%, so he's obviously beaten them. He's benchmark, which is the FTSE All Share World Index or something like that. Mine is the FTSE 100 and FTSE 250 that I measure my performance by, and that's why I've got that. Obviously, Lindsell Train's gone. That's a UK equity fund. That's gone purely because I don't see the point in holding a UK fund when I'm investing myself in UK stocks and trying to make my own way in the to pick quality UK stocks. So I don't start to be counterproductive to do that. Also, the other fund that's gone out of this portfolio is Legal and General Gilt Index. Now, it hadn't really done anything. It was just there like as a hedge, but the hedge, it was never, the upside was never good enough for it to be a hedge. For instance, when we had corrections in the market, I'd lose £1,000, but I'd get £6 from my gilt index fund, my government bond index fund. It's a good product to have, and it was a good fund, but it just really didn't do anything for me. So I thought I'd rather hold it in cash and just deploy the cash as and when I needed it, rather than thinking about dollar cost averaging into that every month. Obviously, we spoke about Distill. I've got another 100,000 units at the similar price, around about the 1.2 pence mark, in this portfolio for Distill, and that's also an £800 since the last portfolio update. So I've invested £2,400 into this stock, and it's now, the holdings currently now at £4,000. That's a £1,600 increase, and in just over 2 months, that's a phenomenal return. Obviously, I'm not selling out of it because I'm holding this for the real long term. I think this is one for the future, you know, and it could be the next fever tree or something. You never know when the products take off and the marketing's ramped up. It's a great product to have, and obviously I spoke about it a bit more in detail. 2 new positions that I've opened this year are JD Sports and AJ Bell. They will both be in my watch list, and I'll be doing a video on both of these about is now the time to invest video. Obviously, I'm going to restart that series. JD Sports Fashion is, well, I haven't brought these at bargain margin of safety prices. I've brought them at reasonable prices. What I've worked out they're currently worth, and they're pretty much priced to perfection at the moment. And they're in the range. They're obviously not at the lower end where it's a margin of safety, but in the long term, I think, you know, you're going to compound your money if you're buying at these prices, and you can just buy at these prices at the moment. That's why I've only put 5% of my portfolio for my initial buying in it. I'm hoping the prices go down in the next 3 to 6 months, so that I can, you know, my next round of investing into these companies, I can buy even more shares in the companies, obviously, because I know in the 10-year future that these are going to be quite phenomenal holdings. And JD Sports is, I'm going to look to probably build a sizable position in this company. Everybody knows what JD Sports is. It's an athleisure wear retailer who, you know, has high store standards, beautiful stores to go in. It's an experience to go in. Everybody loves it. It does well over Christmas. You know, it's not, you know, age, gender. Anybody, you know, my dad buys clothes from there. My kids buy clothes from there. My daughter, my son, my friends, 20s, 30s, 40s, teens, children. And you know, rich, poor, people with jobs, people without jobs, they all spend money in JD Sports. So it is one for everybody. Some of the clothes are expensive. It's been obviously hard for it this year because it's had lockdowns. It's had to shut and open. And obviously footfall's down because of the whole COVID situation. And obviously that's missing out on its impulse buys. It's still got an online, so that is good for it. That's what it's a buy. But obviously if you buy trainers online, you buy the trainers. You go in and buy trainers, you might buy a hat, you might buy a jacket, you might buy a t-shirt, you might buy some sliders, you might buy some socks. It's just these little impulse buys that they're missing out on, really. Incremental sales. But for the long term, I'll obviously do a main video on this, because I think it's one of the great UK growth stocks, to be fair, and it has been for the last 10 years, and I think it will be for the next 10 to 15 years. Now, AJ Bale, I brought a position in this. Just quickly look, JD's share price 8.51, so it's pretty much the same as where it was last year. You could have got it at, but I obviously got in at 2.50, but I didn't invest enough money at the start of the year because I didn't have enough cash. And obviously, if I'd have had enough cash, I'd have had a sizable position in JD now, and it would have been great. AJ Bell, he's currently at 4.32, which is right. You know, it's not really done anything. It's gone to 3.50. It's gone for all the years. So it's pretty much at the same price it was last year. So these stocks haven't really done anything in the last year in terms of price increases. But if you'd have brought them at decent prices, you could have made some money on them this year. You know, wait for them to drop. But obviously, now I've made a position in AJ Bell, and that's purely, as you can see, I've sold all my Hargreaves Lansdown position. Now, AJ Bell was currently at like a 1% dividend yield. Let's quickly have a look at this. No, 0.35% dividend yield, 45 times earnings, but it's increasing. It's obviously, its growth is phenomenal. It's looking at about 30% a year at the moment. And obviously, that's why I've gone into this company, because it's got good cash positions. It's got all the same great characteristics as Hargreaves Lansdown. Switching mode, once people are in there or not, it's growing at the same sort of speed. It's got obviously different, but it's growing at a faster pace. Its cash positions, its customer numbers, a percentage-wise, it is anyway than Hargreaves Lansdown, because it's a smaller company. And the growth prospects are much better for it than Hargreaves Lansdown. So regardless of the dividend, because I'm not looking for income. Well, it's nice to have a bit of dividend and a bit of income, and you know, to reinvest and drip back into the dividend reinvestment plan, to drip back into your stock and build a bigger holding. But that's not the main reason I'm investing. I'm investing for growth at the moment. I've got a 25, 30 year time horizon on my investments. So I'm investing for growth. So any losses, I can recoup them losses and invest more money into it. Obviously, I'm not looking to live off my investments at the moment until I'm an old man. So that's why I've invested in AJ Bell, because I think the growth prospects outweigh Hargreaves Lansdown. It's not to say it's a better company. I just think it's going to grow at a faster pace in the long term. And obviously, it will slow eventually, as Hargreaves Lansdown does. I think it's going to emulate what Hargreaves Lansdown did in the, you know, the last 15 years in the stock market, and I think he's going to follow suit. So whereas I could still probably double my money in 10 years on Hargreaves Lansdown, this could be a 3, 4, 5 bagger. AJ Bell could, so that's why I'm starting to build a position in AJ Bell, and I'm hoping the price goes down, to be honest, as with JD, so I can stockpile some more money in there. The next company is Greggs, and obviously, you know, this was my biggest position. In the end, I ended up investing between the two portfolios £4,000 into Greggs, around the £12-13 a share mark. And obviously I said it would go back up. I didn't realise it was going to go back up in the next 3 months. It's had a decent update recently. I've spoke about Greggs tons. I've done a video about it when the price dropped in the last trading update, and it's obviously had a new trading update where its profits, it should be profitable back to pre-levels of 2022, but it's doing all right. I mean, the Greggs are still open in these last 2 lockdowns. As I said in my previous video, I didn't think Greggs was going to close again, and that was the biggest fear for a lot of investors. They've made 840,000 job cuts. And it's a bit slow here. So obviously, I had £4,000 invested in Greggs around about the £12-13 mark. Around, you know, and now it's at 19.34 a share. I did sell my last £1,200 of the stock because I've top sliced the stock as it's gone through at about 19.66. Its PE ratio is sitting at 20, so it's still not a bad PE ratio. But now I've managed to sell £4,600 worth of this stock to rebuild my cash. To rebuild my cash position. Obviously, you'll understand why when I do my 2021 investing strategy and investment plan for the, moving forward, and how I'm going to compound money and hopefully get to £1 million portfolio in the next 10 to 15 years. But obviously, and now I'm just sitting on £1,000 worth of Greg stock. If it goes down, I'll reinvest more money. If in the future, if the outlook for the company is still the same, I'll reinvest money. I'm hoping in the next 3 to 6 months the price will drop a little bit so I can get more stock into there. But I'm sitting on £1,000 worth of Greg stock. There's actually the house's money. It's all profit. I put £4,000 in. I've took £4,600 out, so I'm always going to sit on a £600 profit on that stock at the moment, and I've still got £1,000 sat there. Which could increase in value, could go down, but then I'll just add more to it again. But it's there. And obviously, if you look, I've got about 5% in my initial positions here in these quality companies. Now, Distill, JD Sports, AJ Bell and Greggs are all in my watch list for 2021. The one that isn't is Legal and General. And if you remember, I had quite a big position in this as well, which I've just top sliced it. So I'm only sitting on £700, which is also house's money. Now, I wanted to keep a bit of this stock. I think I made about £1,000 off my holding over a year in the end, because I brought in around about the 180 mark overall if you averaged it out. Done a lot of transactions into this stock, and it's currently at 276 a share. So that I've made about £1,000 on this. I've invested when it was down, but obviously its dividend yield is 6.3, but my dividend yield for it is about 9. So I'm looking at about £50 dividends every year from this stock now, and it didn't cut its dividend in COVID, so it's not looking like it's going to cut its dividend. So I'm looking at a £50 income from free money. So that's what you can do. And on a bigger scale, if I'd have had more money, I might have had £7,000 holding a Legal General on free money, and that would have been a £500 income. So that's just the things you can do when you invest, and use a bit of the nuances of investing. So I've got a £50 income, holding £700 that is basically appeared out of thin air. Not thin air, obviously it's invested and it's increased, but it's not money I've saved. So I'm playing with the house's money, as you would say in a casino or whatever. But this isn't a casino. It's if you invest with a strategy and stick to your strategy and are disciplined and patient, it will pay off in the long run. And that's basically it. Obviously, I'm not going to add to Legal in General because, as you'll see, like I said in my 2021 strategy video, you see, I'm not investing for dividends. I'm investing for growth. Not growth as in the Teslas and the Amazons of the world, just good growth, with good growth prospects over the next 10 to 15 years. Not the next 10 to 15 minutes, the next 10 to 15 years. And obviously, I'll go through my criteria of how I'm picking my stocks and how the stocks get into the portfolio, how they get onto the initial watch list, how they get, cut to being on the final watch list, and then how they finally get in the portfolio and what the process is for that. I would just like to say this video does not constitute financial advice. I'm not a financial advisor. This is just purely for taking you through my journey of investing. If you wish to do your own investing, please do your own research or ask a financial advisor. I'm not advising to buy or sell any stocks. This is just what I'm doing with my portfolio, and obviously the journey that I'm taking to move my portfolio forward. So I'd just like to say thanks for listening. Could you please hit the like button if you like the video? And if you want to see any more future portfolio updates, could you subscribe and hit the notification bell? Because hopefully this year, if you watch every portfolio update, you'll see, obviously, I'm going to update it, whether it's increasing or decreasing, but we'll see how my investment strategy and how, the stock market and the economy overall fares in 2021. And we can look at that over the next year and see where the portfolio's heading. Thanks for watching the video. I hope to do more videos this year in 2021. Hope to do some analysis videos and watch list videos and strategy videos, and obviously update you periodically throughout the year on how my holdings are doing. 2020 was a good investing year, but we'll write it off as a year as a whole. It wasn't the greatest year for the world. And let's look forward to 2021 and hopefully some light at the end of the tunnel. Have a nice day, guys. Peace out.